buy now, pay later loans may soon play bigger role in credit scores. The credit rating companies argue that reporting of on-time payments can help shoppers build a credit history, but consumer experts note that late or missed payments can hurt. Hey, what's going on, my friends? It's your man Adam Ace Spencer here with another video on grants, loans, and credit. And I wanted to help kick off 2022 with this important news that might have a major or a minor impact on your credit score and your credit reports. Buy now, pay later online loans are getting attention from both regulators and the credit industry as consumers increasingly turn to them, and they may soon play a bigger role in credit scores. Loans from financial technology companies, including Affirm, Afterpay, and Klarna, offer an updated version of layaway plans, once a common option for shoppers to pay for big-ticket items in installments. The new offerings, widely available online or via mobile apps, are generally used for smaller purchases like shoes, apparel, and concert tickets, and allow the buyer to get the items right away. Shoppers typically apply at checkout and can get approved quickly with the cursory credit check. They then pay for the purchase in 4 or fewer installments over several weeks. Borrowers usually don't pay interest as they would with traditional credit cards, but some lenders may charge fees for late payments. Pay later loans are attractive because they give people flexibility to pay over time, but without any interest. They are most popular with millennials and Gen Z consumers, people now about age 40 or younger, according to a recent report from Fitch Ratings. They also appeal to people who may have lower credit scores or scant credit history, which makes qualifying for traditional loans and credit cards at affordable rates more difficult. For now, many of these smaller short-term loans aren't reported in a consistent way to credit bureaus, so borrowers don't build a formal credit history by using them. But as the loans become more mainstream, that's changing. The major credit bureaus are working to include more pay later loans in consumer credit reports. Equifax, for instance, said 2 weeks ago that it created formal standards for reporting the loans and expected to begin adding them to its consumer credit files in late February. Experian said it already included data on pay later credit, including short-term loans, in its credit reports and is working to add more. TransUnion is well on the way to including such data, said Liz Pagel, Senior Vice President and Consumer Lending Business Leader at the credit reporting company. All that means that shoppers' track records of making pay later installments may increasingly influence their credit scores. Those 3-digit numbers that summarize your credit report and determine whether you qualify for a traditional loan or credit card and what interest rate you will pay. Equifax says that's a good thing because lender reporting of an on-time payments can help shoppers build credit histories. We have been emphasizing the opportunity to report in order for consumers to benefit, said Mark Luber, Chief Product Officer for United States Information Solutions at Equifax. Equifax says a study of anonymous pay later data found that a majority of shoppers were helped by having an account with on-time payments in their credit file, with an average FICO credit score increase of 13 points. People with scant credit histories who may not qualify for traditional loans had an average FICO score increase of 21 points when on-time pay later payments were added to their files. The average basic FICO score is 716. Generally, scores of 670 or above are considered good. That could help consumers who pay their loans on time by helping them to build a positive credit profile, said Lauren Sanders, Associate Director of the National Consumer Law Center. But as with traditional loans and credit cards, paying later could tarnish their reports. The jury is still out on this. And so, as it is, missing an installment payment or failing to pay at all can already harm a shopper's credit. If a consumer fails to pay, some companies may cut off access to new loans or send the account to a collection agency, and that could show up on credit reports. The financial website Credit Karma said an online survey conducted on its behalf in August found that close to half of American adults had used some sort of pay later service. About one-third of them reported missing one or more payments. Of those who missed at least one payment, nearly three-quarters said they thought their credit scores had fallen as a result. Most people said they used the plans to pay for purchases of $500 or less, with about one-third financing purchases of $100 or less, the survey found. Equifax said it would encourage pay later companies to report consumer payment histories. Pay later companies contacted said they generally supported the practice. Reporting pay later loans to credit bureaus helps protect consumers and enables all responsible underwriters to more accurately assess risk and help prevent consumers from being overextended, a firm said in an email. Frances Crichton, the president and chief executive of the Consumer Data Industry Association, a trade group for the credit reporting industry, said it was important to have pay later loans reflected on credit reports so lenders could have a true picture of a loan applicant's overall credit profile. But because the loans are structured differently from traditional loans, he said, the credit bureaus first had to resolve technical issues to add them. We have to make sure we do it right. And at the same time, the Federal Consumer Financial Protection Bureau has stepped up scrutiny of pay later companies. In mid-December, the Bureau opened an inquiry asking 5 companies to supply details about their business practice by March 1st. The Bureau, citing the explosive growth of pay later during the pandemic and through the holiday shopping season, said it wanted to understand the potential benefits and risks to consumers better. The agency said it was also concerned about how the companies use the data they collect from customers. The agency noted that if consumers use the loans for multiple purchases, they may have trouble keeping track of payments. Because of the ease of getting these loans, the agency said, consumers can end up spending more than anticipated. Installment payments are usually deducted automatically from debit cards, so shoppers may be charged overdraft fees if they don't have enough money in their accounts to cover the payments. If shoppers pay the installments with a credit card, they may run up additional debt and interest charges on their card if they don't pay their installment balance in full. Also, the consumer agency said pay later loans carry fewer protections than traditional credit cards, like the right to dispute a charge if a product is faulty. Members of Congress, as well as consumer groups, have called for more oversight of the companies, noting that because the installment loans don't use traditional credit checks, it's not clear whether borrowers have the ability to repay multiple loans. So, my friends, the question is, do you think this will be a good thing or a bad thing? Ultimately, it will depend on who you ask. If it's someone who is on top of their payments, their debt, and being on time, if you have a good credit score, you're probably going to love this because it will only help you continue to give you opportunities to, diversify the type of, credit lines and loans and whatnot that you have, which will give you essentially, as you can see, potentially another opportunity to increase your credit score. And again, that's going to be determined or primarily contingent upon you being responsible and making sure you continue to make your payments on time. However, if you're someone who happens to have fallen behind, if you have some missed payments, unfortunately, this is not something you want to happen. It's not good news because it will be only more strict as they start to report more of these type of programs to the credit bureaus, and it will start to appear more frequently or have, as you can see, more of a major role or influence on your overall credit score. So, of course, as usual, make sure you guys, if you haven't yet, like this video. Much appreciation for watching. Hopefully, you found this video helpful, gathered some information here as we continue to focus on rebuilding our credit. And yeah, this is definitely some important information to keep in your mind this year in 2022. As the year continues moving forward. So gonna wrap it up there, but much appreciation for watching. As I mentioned, like this video if you haven't yet, and also subscribe to the channel, hit that notification bell so you guys can stay up to date on all of our latest and upcoming video content. But all right, my friends, you already know I gotta keep it moving, but I'll see you in the next video. Peace.